You ever stop to ask yourself what truly distinguishes the people who panic during a crash from the ones who walk out of it wealthier than ever? Why do some lose everything while others seem to mint money straight from the chaos? Here's the uncomfortable truth. Every major crash in history has created more millionaires than any bull market ever has. And the one approaching in 2026 could become the biggest financial opportunity of your entire lifetime. The real question is, will you be prepared to seize it? Right now, no matter where you look, the world feels unstable. The economy is slowing. Inflation is still devouring savings. Interest rates are sky high. Major companies are quietly trimming their workforces. And yet, somehow, the stock market sits near record highs, acting as if none of this turbulence even matters. But here's what most people forget.
If you're emotional about investments, you're not going to do well. I mean, facts are facts and reason is reason. In investing, there are no called strikes. I can look at 1,000 different companies, and I don't have to be right on every one of them.
Markets always look the safest. Right before they implode, the warning indicators are flashing bright red. But the majority of people are sleepwalking through it. You, however, are about to understand what's actually happening beneath the surface, and more importantly, how to transform what's coming into a once-in-a-generation opportunity. Because, yes, a crash is coming. Not because of fear, not because of panic, but because math, history, and long-term economic cycles all point to the exact same outcome. And the purpose of this message isn't to scare you, it's to arm you. So when everyone else is sprinting away from the fire, you'll know exactly where the gold is buried. Let's dig into what's happening behind the mask, right? Now the economy is being crushed from every direction. Interest rates have been pushed to heights we haven't seen in decades. Businesses that once thrived on cheap borrowing are suffocating. Real estate is priced beyond logic. The average person can't afford a home. Credit card balances have exploded. People are borrowing just to survive. And somehow, stock prices keep climbing higher, completely detached from the economic foundation beneath them. It's like watching someone stack bricks on a foundation that's already cracking. Eventually, gravity always wins. This is the classic light cycle illusion, the moment when optimism blinds logic. Investors convince themselves that this time is different, but it never is. It's the same script repeating again and again. The dot-com bubble of 2000, the housing collapse of 2008, and now the everything bubble of 2026. History always leaves clues. There's one chart Warren Buffett calls the single most accurate measure of whether the market is overvalued, the ratio between the total stock market and GDP. When that ratio climbs above its long-term average, means stocks are overpriced relative to the economy that supports them. And right now, that ratio isn't just above average, it's nearly double what it should be. That is a massive red alert. The last 2 times it reached this territory, devastating crashes followed. Then there's the Federal Reserve. Jerome Powell has kept interest rates at some of the highest levels of the modern era. Most people assume that as soon as he cuts rates, everything will magically go back to normal. But that's exactly the trap. Every major recession in history didn't begin while rates were climbing. It began after the Fed started cutting. Because rate cuts happen only when the economy is already slowing. Profits are shrinking. The system is quietly cracking. That's when the real pain begins. Now, consider the housing market. Adjusted for inflation, home prices today are even higher than they were before the 2008 crash. People are signing 7% and 8% mortgages for properties priced higher than the last bubble peak. It's irrational. It's unsustainable. Anything unsustainable eventually collapses. And then we have the crypto. Market, one of the clearest demonstrations of repetitive cycles. Every 4 years, crypto experiences massive booms, followed by brutal wipeouts. 3 years of explosive gains, followed by 1 year of destruction. It happened. In 2014, again in 2018, again in 2022, and right now. We're back in that euphoric stage before the next drop. If the pattern continues, 2026 could trigger another major correction, not just for crypto, But for all high-risk assets across the board, put all these pieces together and a much bigger picture emerges. The warning sirens are blaring in every corner of the financial system. But where most people only see danger, you can choose to see opportunity. Because if you know how to position yourself correctly, a crash isn't the end of your story. It's the beginning of a new one. Let me explain. Every legendary investor from Warren Buffett to Charlie Munger, from Ray Dalio to Howard Marks has repeated the same principle in different words. The best time to buy is when everyone else is terrified. But that's always easier said than done, right? Because during a crash, fear takes over everything. Your friends tell you to sell. The news screams collapse and crisis. Your portfolio is bleeding red, and yet in that exact moment, wealth quietly shifts from the impatient to the prepared. So how do you become one of the prepared? The answer starts long before the crash actually hits. Right now, while markets are still elevated, you need to position yourself the way real professionals do. Let's go back to Warren Buffett for a second. The end of 2025, his company, Berkshire Hathaway, was sitting on one of the largest cash reserves in its history. Roughly half of its total assets? Think about that for a moment. The greatest investor alive is holding close to 50% in cash. Why? Because he understands something simple and powerful. Cash isn't trash during crashes, it's ammunition. Quick note, I've created a free Telegram community where I teach you how to make money with YouTube and build channels just like the one you're watching right now. If you want to learn how to do it, step by step, the link is down below. Now, back to the message. When prices fall, cash transforms into power. It lets you buy great companies at a discount, real estate at half price, and quality assets that other people are being forced to dump out of panic. But it's not enough to just hold cash. You need a clear plan, because opportunity doesn't wait around. When markets crash, they crash fast. The window to act is small, and only the people who are ready in advance capitalize on it. So here's how you can do it. Step by step. Step 1. Build your dry powder. That means stacking up cash or short-term. Low-risk investments, things that won't get crushed in a downturn, so you have firepower when it's time to strike. You don't have to sell everything. You just need enough liquidity to move while everyone else is frozen. Even 30% in cash can completely change your outcome. Step 2. Create your buy list now. Every crash eventually turns into a clearance sale on high-quality assets. So before the storm hits, write down the companies, ETFs, or sectors you truly believe in long-term. Look for businesses with real profits, low debt, strong cash flow, and dominant positions in their industries. Because when panic hits, even the best companies get dragged down with the rest of the market. Hey, that's when you step in and buy. Step 3, be patient and disciplined. You will never time the crash perfectly, and you don't need to. You don't have to catch the exact bottom. Your goal is simply to be buying while everyone else is dumping. Imagine if you had picked up world-class companies like Apple, Amazon, or Google in 2009 after the financial crisis. Or Bitcoin at $4,000 in 2020 when everyone insisted it was dead. The people who had courage in the chaos completely transformed their lives. Step 4. Diversify your strike. The people who get wiped out in crashes are almost always the ones who bet everything on one single asset. Don't do that. Spread your capital across different areas: stocks, bonds, commodities, real estate, maybe even a small portion of crypto if you truly understand the risk. The goal isn't to perfectly predict which one will explode in value. The goal is to make sure you're positioned in the right places when the next wave of growth begins. Step 5. Master your mindset. This is the most difficult part, and the main reason most people fail. Because fear is contagious. When markets start falling, your brain screams at you to sell, to protect what's left, to get out before it gets worse. But the wealthiest investors train themselves to do the opposite. They feel fear like everyone else. They're human too, but they refuse to obey it. They follow logic. Remember this? Not emotion. Market crashes are emotional hurricanes, not the panic. But weak hands get blown away. Between the ones who get wiped out by every crash. Foundations. The ones who quietly use it to build generational wealth. Now, picture what 2026 could truly look like. Stocks plummet 30%, maybe 40%. Housing prices finally crack. Crypto gets obliterated again. The headlines scream catastrophe, but underneath all that noise, something extraordinary is taking shape. Hidden inside the panic are bargains, the seeds of the next bull market, the next wave of wealth creation. It's exactly how Warren Buffett made billions after the 2008 crash, buying when the entire world was too terrified to act. That's the blueprint. That's how you turn a crash into a fortune, by being prepared before it arrives. So what? Signals warn you that the storm is close, the same ones the biggest players study. Extreme overvaluation, dangerous leverage, investor euphoria. When people stop asking, is this risky? And start insisting, it can only go up. That's when you know the end is near. Just look at the past few years. Speculative mania in meme stocks, over-leveraged. Real estate, crypto gambling, and AI companies trading at 100x earnings. It's the same pattern repeated through history, just disguised behind a new mask. The characters change. The technology changes. The story never does. And when that story ends, when the crash finally hits, remember this truth: it's not the end of the market. It's a reset. The wealthy will get wealthier, not because of luck, but because they were positioned. Because they understand a simple rule. Chaos creates value. Fear is temporary. Per value is permanent. Here's a perfect example. During the 2008 crash, American Express lost over 70% of its value. People thought the company was finished. Buffett didn't. He invested hundreds of millions right in the heart of the panic. A few years later, that single decision produced billions. Not because he could see the future, but because he understood one timeless principle. Great assets always recover. Bad assets never do. Your responsibility is to recognize the difference. And you don't need to be a billionaire to apply this strategy. Whether you have $1,000, $10,000, or $100,000, the principle is identical. During a crash, high-quality assets go on clearance. And if you keep your composure while others lose theirs, you win. So when the crash of 2026 arrives, and it will, you'll face two options.
Is I develop the cash flow so I can buy gold and silver. And the reason I do that is, as you notice, the gap between rich and poor is getting wider and wider. And
you can panic, sell everything, and join the crowd. Or you can see it for what it really is, a global financial reset button that gets pressed every few decades. It's the storm that clears the sky, the fire that burns the forest, but leaves behind fertile soil for new growth. And the ones who understand that, who prepare their mindset and their money, walk out of the chaos stronger, richer, and freer. But the key is this: don't wait. Preparation is wealth. Panic is poverty. Every crash rewards the disciplined and punishes the emotional. And disciplined begins today. As we move toward 2026, remember what you've learned here? Extreme valuations, toxic. Debt levels, blind overconfidence, and an overstretched economy. These are the warning signs. But opportunity is hiding right beside them. Build your cash. Make your buy list. Watch patiently. And when the storm breaks loose, act decisively. Because while everyone else is crying about losses, you'll be quietly constructing your fortune. That's how you use the 2026 market crash to get rich, not through luck, but through preparation, discipline, and courage when everyone else has none. Every crash writes a new chapter in financial history. The only question is this: will your name be written in bold or forgotten? Because when the dust settles, those who panicked disappear. But those who acted with strategy are remembered as the people who turned the biggest crash of their lifetime into the greatest opportunity they ever had. What do you think? Let me know in the comments, and don't forget to smash that subscribe and like button. Once again, if you want to learn how to build a YouTube channel like the one you're watching and turn it into a real income stream, I opened a free Telegram community. Link is below. See you there or in the next video. And just a reminder, I'm not a financial advisor. This video is for educational purposes only. Your results depend entirely on your own decisions and actions. Thank you guys. See you next video.